Surprise! That's our topic for today's Backstage Pass. Well, hey friends, hope you're having a great day so far today as we head into the afternoon and extended trading hour sessions. Stocks are up ever so slightly. Mortgage bonds are down on the day. Mortgage bonds are down about 25 basis points at the time of recording. The 10-year yield is up about 11 basis points, and that makes 2 days in a row of kind of similar trading. The national average for a 30-year conventional fixed-rate mortgage, that came in yesterday at about 6.27%, about where we were expecting. Today, though, based on market movement, we are expecting that to creep up some more, maybe even to 6.4, maybe even as high as 6.5%. We'll just have to wait and see how the day settles out. And, remember yesterday we talked about the fact that the next couple of weeks are going to be mostly holiday trading, sideways trading, range finding, unless there's a big surprise that comes out. Well, surprise. The Japanese Bank of Japan, Japanese government laid a surprise on us. Bank of Japan has said they're going to allow the JGB, the Japanese government bond, to double its yield from 0.25% to 0.5%. And that has kind of trickled down throughout the rest of the other international communities and government bonds, including the treasuries here at home. Why? Because the global economy is very interconnected. As the Japanese government raises their yield on their bond, well, that makes that more attractive, and it makes, investing in other bonds less attractive. And so we see some money moving into the Japanese bond. Now, there's also a currency play here, and I'm not going to dive too deep into this currency play, but basically, as the Japanese bond goes up in yield, it will actually help bring up the value of the Japanese currency, the yen. And there's the trading in currencies is what's known as Forex, or foreign exchange. And so there's actually a higher rate of return in currency trading. And so basically, institutions and governments are going to buy the Japanese bond. As they buy the Japanese bond, the price or the value of the yen is going to come up. So they're going to get their exchange at a lower value of the yen right now. And whenever they pull their money back out, the yen's going to be valued higher. They're going to get a higher rate of return. And so that's also having some effect on the overall global bond economy and bond market. Now, later this week, we are going to get PCE data, the personal consumption expenditure. We expect that to echo the CPI data that we've already seen, but maybe be slightly better just because of internal workings on the PCE data. And the theory or the idea is that our bond market here in the United States, we're going to like that data that comes out on Friday. And so we don't expect the JGB move to be a long-lasting effect. We do expect for bond markets and investors here in the United States to take a look at that PCE data and say, hey, this is good, and see some improvement there. We will know, time will tell over the next week, 2 weeks, time will tell. But that's all the news that we have for today. Tomorrow we are going to be bringing you some National Association of Home Builder news, so stay tuned for that. But until then, remember, stay positive, have a great day. We'll see you tomorrow.